Good afternoon, everyone. Welcome to Monday, November the 10th, 2025 edition of Trading Trends ETF edition. We were looking at the market over the weekend. Crypto trading very strong. Was looking closely at Ethereum call spreads. We had some strength in the global rally here. We're going to look at the UK value in there. Italy broke out for 2-week highs, as did Brazil. The global bull market is absolutely still on. Let's take a look at the charts. Also, a little bit of a note: if you're subscribed to Investopedia chart of the day, I'm the writer this week, so you'll get all these insights written out. I was writing yesterday about uranium and utilities and staples, etc. I remember Friday was a little bit of a nice recovery into the market, and then we'll see what happened today. Let us get into the doc here. Hope everyone had a wonderful weekend. Let us share and. Give me one sec. All right, we'll just drag this out then. All righty. Let me see. If you have a ticker or something, drop it in and we will take a look. There has been a nice rotation today, and that's what we were looking for. All right. So here we go. The UK and growth rally about 2%, while volatility, as measured through the proxy of VXX, a big drop down 5.5%. We were charting it, looking at it on Friday, and a really, really nice looking candle. And we'll take a look at what I'm talking about. So we'll keep this simple. Let's get right into the panel here and look at the intraday tape and some big movers, and you'll see what I'm talking about. So here, screen, they've really digested and gobbled up growth today. You'll see what I'm talking about. SPY up 1.5%. We'll get more under the hood in that. Tesla up 3.5%. Nvidia, my God, up 6%. Palantir up 9%. AMD up 4%. Meta, even that, you can't keep a dog down, although the stocks look terrible. I've seen all kinds of posts about their valuation, and it seems like a screaming buy here. It likely will be. Meta up 1.5%. Micron, we've been talking about it. It's like the perfect stock. They came for semis today, and my God, Micron up 6.5% on what's already been a stellar run, up 200% year to date is Micron. Trees don't grow to the sky, but they can get pretty close. Microsoft adding nearly 2%. Google up 4%. We're talking about multi-trillion-dollar companies here adding 3-4%, moving like it's fart coin. Gold up 3%. Sidebar, our SLV trade is looking wonderful. The 44-48 call spreads, I'm honestly targeting an exit this week for a double. Right now, we're up 60% on that spread. It's working wonderfully. Silver had a rocketing day today. And also Robinhood to close out the single stock look here, up 4%. That stock looks great as well. So interesting tape. We'll start here at the open. Really kind of choppy. It started out a little bit strong, and then they sold it off here. It looked a little bit, I don't want to say scary, but they did sell it off here at 11:30. We're touching 675 in SPY, and then really a beautiful resumption at 12:30 p.m. Eastern time. We got above a inclining volume weighted average price on the day. Love that. 677.60 is your value there. And really, you could see here all green bars. Okay, so from this low at 11:30, they were buying until the bell, literally. As you could see here at 3:30, we peaked at 682, and we closed just beneath that. So they were really enthusiastically buying the market today, and you can see the volume bar too at 3:30. Folks said, you know what? I got to get in here. Pushed SPY to 682. As I zoom out, just a little bit of my date here, in terms of the 15-day cycles, is it possible that was the hammer right here on the Friday session? Really incredible looking candle. If you remember, just a quick recap, we touched 661. VWAP on that day was 668, and they actually closed us at 671. Amazing strength. That's just an amazing looking candle. Typically, when you see something like that, it sets up a nice 2-3 week rally. You could see one here, and then that led us to highs here. You see one right here on September 2nd, right after Labor Day. Boom. That was a rally. You had this right here as well on August 1st. Boom, rally. Here's another candle on June 23rd. Boom, rally. You get the point. So is it possible that we were off on our count by 4 days? Yeah, it's possible. I like that the Mag 7 got gobbled up today. I just am not super quick to throw in the the towel that we're not going to see 674 on SPY, or essentially 1% off from here. That's the level I'm watching closely. I'm going to see obviously what happens tomorrow. If tomorrow's still a bullish day and it's to the tune of 75 bips or more, which is half of today's candle, I would say the date count was off, and we are going to begin that bullish accumulation phase for about 15 days or so, beginning as of, it started the afternoon on Friday when you got that plunge below 665. And it's really as simple as that. The charts to me still look extremely clean. Look at this. They refuse to let it get beneath a 48 RSI. Even there on that massive, scary bearish engulfing on October 10th, we got to a 42 RSI. I've been writing about that with the chart advisor. Really, it's been something that's been telling for me. If you've held above a 45 RSI since the April lows, it's an area that you want to be in, and this SPY is no different. So again, I think we may hang around, maybe another slip possible. Sometimes I'm crazy with my calls. It seems, way out of left field. We call for South Korea to decline by 8%. It did. We call for a massive rally in SPY, and it did. We see, what's going to take something like Ethereum down, and it does. So this is the point. I want to see another day. It was a great looking day. Again, we ended up sideways at 10 bips, but we had a plunge on Friday and today, a nice 1.5 gain. Specifically, really the Qs were up 2.25% for the GOAT. That is the ETF. So again, to summarize this, I think we might hang in right around 674, which is a percent decline from here. We had said before 2 weeks ago, but it seems like ancient history. If things get ugly, they'll drop us to about 650 to 660. That looks like it is absolutely in the rearview mirror. And upside call still here is I am looking at right around 690 to 695 for end of the month, right around Thanksgiving time. I'm looking for that 695, 690 mark, right around there. And as you can see, I don't know if you're checking Polymarket or Kalshi, there's very heavy odds that the government shutdown is expected to end this week, and that will relieve a lot of, even though it doesn't really exist, the volatility in the market as it is holding down millions and billions of dollars a day from air traffic control, a lot of inefficiencies around the country. So once that does lift, I do think you'll see a breather go up higher in the market, as if we need more. Just understand that we are less than 1% from all-time highs. Let's see what they bought today, and that's really it for SPY. I mean, it's pretty simple. It's going to base around this week, maybe 1% downside, and then we're going to see about 10% up, or I'm sorry, 10 points up in SPY. Let us get to what they were going today, and this is so bullish to me, the action that happened today. They gobbled up EAFE, that is EAFE value, to new 52-week. And we're going to look at the UK in a second that also has new 52-week highs. I don't typically look at this ETF all the time, but it lets me know that really breadth exists. And this has had, look at this chart here, scary moments here when globally we were having an ugly time in early April, as you recall, but a rising 200 moving average. This thing has been rising beautifully since the spring. And exactly what I'm talking about with that RSI. The floor on this is 40. Some of these stocks you saw, Pinterest, of course, those are stocks. You see these things get 13, 15 RSI. We're looking at a geographical ETF that doesn't drop below 40. That's a space you want to be in. That has strength, okay? Just give me a sec here. My other monitor on a different time frame where I load up the charts is not loading EAFE. I show you guys the clean one on a 1 year for simplicity's sake. But as we tell here, 52-week high in the EAFE. The 200 moving average is stuck at 63, or a nice 10% off from where we are currently. Oh, there it is. Give me 1 second, y'all. Boop, 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 boop. Boop, boop, boop. And it's important to understand the holders in this too. I believe it's Rogers, Telecom. EAFE really has stuff that obviously you're not going to really have in SPY because it's European. So these are, it's BlackRock runs it. And these are all ex-US, ex-Canada companies. So you're only getting Europe here. And amazing flows since, let me pull it up here on the screen. Honestly, since March 31st, I'm looking at Chaikin Money Flow. So I'm really zooming in on the last hour in terms of candles. And I'm looking at it from here, right after this plunge, after it still had a rising 200 moving average since April 11th here. They have really not batted down at this ETF. And you can even scratch 67 RSI. Don't love that. Wouldn't chase that. for me, this is likely going to have to correct through potentially time instead of price, or said another way, it's going to have to basically base here. I think in terms of the charts, this is going to probably drop to about 68.5 at some point, and at which point, when it does, you should gobble it up, because to me, the target is right here at 69. Also, a bit of a coil here. You see, this is value. It doesn't move like it's NVIDIA, so, curb your enthusiasm. But this kind of similar to Korea, what we saw, a lot of energy here constrained from August through just last week. This ETF has been stuck from 69 to 66.5, and now we're 69.5. So be aware of this. I wouldn't chase it right here of the upper Bollinger Band. As you can tell, it's had doing a quick eyeball glance here, 5 closes at the upper Bollinger Band. Median return after, yeah, it was positive, but I personally wouldn't chase it. Here you got one, and then boom, you had a 1 week decline. Here you had one, and then essentially went higher for another week. So mixed there. Here you had one, close upper Bollinger Band and higher. Mixed bag. I personally just want to chase here in addition with the bearish divergence, something I pay attention to. But that is EAFE. If you get an invitation, honestly, on some sort of drop in the market at 60.5, I would get into Europe value. So guys, the bull market is not ending. I'm telling you to go into Europe value. Okay, what year is it? Next, EWU, the UK, new 52-week highs. Okay, unbelievable. The global bull market continues. Again, when SPY is not just raging and hitting all-time highs every single day, the rest of the world is catching up. Okay, they don't have the NVIDIA's, Apple's, Microsoft's like we do, where we all have the data centers and the spend needed to have the CapEx continue and going with all these further innings in AI. Rogers doesn't have quite that. So seeing here, EWU, kind of similar flavor of ice cream as the EFV. Of course, they're correlated. Again, bearish divergence, not going to kick a dead horse on this, but it's exactly the same reading. 67 RSI, new 52-week high. Outside the upper Bollinger Band, it's done it a very few times. I would also count them on one hand this year. Great looking chart. Really has had a phenomenal trading I'd say from February. A great place to be in. Not a massive mover, 35 to 43 in 9 months. And it just had a bad week. That was just a bad week from April 4th to April about 11th. And then boom, right off the bottom. When most of the globe was oversold here. For this one, I would not chase, similar to what I said for the EAFE value. If this gets on some kind of volatility increase this week, although I don't think it's going to happen, but if it does, and this drops to 42.5, reduction of a very close to $1, that's an invitation to go higher. And you can see here, this one has a little bit more momentum than the EFV. EFV, we're looking at, essentially range bound for a while. EWU has had higher highs here since early October. Great looking chart, the UK. Many great looking charts are going up and to the right. And then let's get to the bell of the domestic ball, SPY growth. You saw, the names when we were looking at the opening segment here, what they were gobbling up today. SPY growth up 2.3%. I'll be writing about this. You can see it published tomorrow. A couple of these charts, actually. Here were the all-time highs for SPY growth 2 days before Halloween here at just inside of 110, call it 109.60. You got that hammer pretty much across the globe on Friday when we plunged and then rallied. And then, of course, again today, up to nearly 1/3%. What I say for SPY obviously goes for this. We could potentially see, it's a great looking candle. Sometimes it doesn't just go off to the races. It very much can. I'm just still leaving the door open, this specific ETF, for a $1 reduction. It's not massive. It would be about a % drop, similar to what I said for SPY, to get us to that, from here, 681 level to just about 673. So I'm leaving the door open for that. For me right here, entries around 106 seem wonderful, with a target of 110 or new all-time highs. So that's what I'm waiting for. Ideally, you get a drop to 106. You do that 106, 110 December call spread, and you're sitting pretty, is what I'm angling for here. What did they sell today? This is so bullish. Only one product here was down, multiple standard deviations. It was VXX. Volatility down a pretty whopping down 5.5%. We were talking about this, I believe, on the video on Friday, because VXX is typically a part of the recap. And similar to what I said just right now about SPY maybe having, I don't want to call it flush, but 1% deduction some point this week. Maybe there's a bad news from the Senate on the government shutdown or whatever, or a tweet or here or there, or Trump calls another Fox NFL game. I don't know. But no Birds tonight, by the way. We'll beat those Green Bay Packers. But right here, I could see VXX maybe in the charts having another move here above 34, possibly. I'm not going to say 37. That's the absolute top of the range. We've only been there 2 times since the end of summer, so I don't think that regime is back by a long shot. But I'm leaving the door open for VXX essentially to get rejected at 30. Between 34 and 35, which is its 20-day and 50-day moving averages respectfully. And like I said on Friday, once you get that, that will probably mean that is the end for, and then SPY will rally. That's what I was thinking. From Friday, it touched 37, and then now look where you are with a 32 handle. So leaving the door open, I just want to see if this, craters tomorrow. It's not craters, but let's say down 3% tomorrow. Then the run is on. VXX, and as I'll write about this as well. New all-time lows incoming for this ETF in a couple of weeks. So pretty big. And that's the only multiple standard deviation loser today, guys. So they bought European value, for goodness sakes. They bought the UK. They bought SPY growth, totally risk on, and they sold volatility. Come on, guys. Top 3 gainers of the past 5 days. We said you should buy pullbacks on GDX. I've been saying it from the end of 2024 and literally wrote about it in January for Chart Advisor. I said buy GDX on pullbacks. I am long SLV, which is, of course, correlated. GDX is your number 1 performer over the past 5 days. Today, a magnificent day of 4.7% and up 7% over the past 5 days. You can see it off that beautiful hold off of 68 even that we got on the 4th of November, 6 days ago. And look at this, from 68 to 76. You got to be in these alpha generators, and gold miners is no different. You get an allocation. It's not that hard. You get allocation to the beautiful precious metal that's making all-time highs pretty regularly. And then you have the equity tilt from these gold miners that are lifting guidance and so on and so forth. So you're playing in the stock market and you play commodities. GDX, best performer year over year, up, I think, 90% or something now. Don't overthink it. It's a winner. This is going to have another strong week and a half. Doesn't really even matter what SPY does. This will get to, in my opinion, to $82 in about 10 days or so. The highs are 85, struck on the 16th. I think we'll be just inside that. Again, though, from 76 to 82, last I checked, that's $6. That's a pretty decent move. To me, what stands out are the even the 77-82 call spreads December, or you could just do straight up. It's a little bit risky, but I mean, it depends how, all have different risk aversion or appetites. You could also do the 70. You could do like the 79 calls December. I don't think it's changed, but just be careful. You're going to need to move quickly. I think it will cement and continue. Again, if you get the winner of the year under a 50 RSI and you had that opportunity here from October 21st up until Friday, that's that. That's like, Steph Curry's having a bunch of 9-point games. It doesn't happen for a season. It's a moment in time. And that's what happened with gold miners. Your number 1 ETF on the week, number 1 on the year, and number 1 in your hearts is the gold miners. Number 2, best week. And we were poo-pooing on this because a lot of the individual constituents have not been performing well because everyone's been cracked out on beta, getting as much in bed with the S&P as they could. Insurance. And I know Warren Buffett just wrote his final letter. Teardrop for one of the GOATs, the GOAT. Love you, Warren. Insurance up 5% over the past 5 days, or an average of 1% a day. Essentially kind of dead money here. You can see the 200-day moving average adding literally half a cent a day. RSI, even I'll say above 54 RSI for the first time since October 9th. So they are bidding it up just a little bit, but really range bound. The 200-day moving average is at 58.21. It closed at 58.60. A lot of folks have, gotten out of insurance. The individual holds, like I said, do not look great. The chart to me does not look great. I don't want to get in this after had, for what it is, a rally from 55 to essentially 59. That's kind of a big move for insurance. I don't want to chase it here. The market is, in my opinion, going higher. Rising tide lift all ships. This may tag 59. I said may tag, like the Maytag repairman. This may tag, may pierce, touch 59. Like I'm seeing a 59 handle in the horoscope card for this thing, and then a decline. So I think it has a little bit more to go to about 59, maybe 59.5, but still well inside the early October highs, and then a decline to about 57.5. I don't think the game is over yet with this 200-day moving average. It's done before as well, where it can hold above and it's still inclined and it still drops below. This has just been the flavor since the April lows. This group peaked last Thanksgiving at $62. So while it's not down materially, it's not really attracting investor dollars. And again, these are Berkshire, Marsh, Travelers, etc. But it's having a very good past 5 days of an average of 1% a day. Today, it seems just digesting those gains. I think it's going to start to reverse. Personally, it's not going to pay you a lot because it's insurance, selling insurance on insurance. You could sell but again, check the option chain. I don't think it's going to pay you a ton because it's KIE, it's insurance. But you could do that. Also having a lot of green days in a row. I will say it's had all green days except one since October 30th. So very good bullish action. It was red on the 6th. But other than that, I just think the buck is going to stop here very soon, and then a little bit more meandering. It looks like selling upside calls is not a terrible idea, but it's not going to generate you a ton of income. But if you need exposure for that, there you go. Next, as we talk about the global bull rally continuing, Brazil, new 52-week highs today, up 3.5% over the past 5 days. Today, up 1.3%. That little caret there denotes a new 52-week high. Don't forget, this Brazil was all the rage back in the crazy GFC, the Great Financial Crisis. This was a $102 stock. Remember, very commodity sensitive with oil, and it was overbought for about like 4 years on and off Brazil. If you remember, this was pretty crazy. This ETF went from 22 to 100. Okay, a 4-bagger in an ETF, it basically almost like doubled every year. Now look at where we are. Beautiful looking chart for. I would say really, if you want to be a lazy trader on this, I don't love a sliding lower 200-day moving average. Of course, it's a year-long view, so it lags. But if you really want to look at this was an easy way to trade this. You bought the breakout above 29. We spoke about it here as well back right around Labor Day when this was getting its overbought reading. And that's what you can see here. Again, ugliness in early October. Took it to not oversold. High volume day on the 10th when we had that basically global bearish engulfing pattern. And here we are at new 52-week highs. Now, what say we for a short-term forecast? I don't want to chase this right here. You do have a overbought registration, which is good to see with a 52-week high. Lovely. They were upset essentially that the bell rang today because it closed at highs. Then again, what didn't close at highs today? In terms of SPY and a lot of other correlated assets. This is not, it is Brazil. But 74 RSI, does it go higher tomorrow? You're getting some vol expansion. Yeah, maybe it gets a 33 handle. But personally, I would sit this one out unless you're a straight momentum trader, day trading the ETF and whatnot. I would rather wait, for this name. I'll tell you if something's setting up. I'll tell you if it's not. I would rather wait for this one, about 2-ish weeks to a 31 entry, 31 even. And then that will give you a participation to get into one of another, something besides Mag 7 to diversify and get more chips on the table, which is what trading is. That is Brazil. New 52-week high today, up 3.5% over the past 5 days, up 1.3 today. What are they selling? Are they selling losers or are they taking profits? The worst week has come for uranium. I am looking closely at uranium call spreads as well. This thing is a winner. It peaked back in October. Uranium, I think, is setting up very nicely. Kind of, like what we were talking about with the market here. You see that candle from Friday. It went very low. This thing went to $44 to $48 in one day. So be careful with uranium. I have not participated yet. I don't love buying into weakness. So I'd rather see this curl up and get above a 50 RSI, which coincides with it being, handily closing above its 50-day moving average. And that's kind of what I'm waiting for. Personally, I think entries under $50 will reward you. The flows have been a little bit weaker, and my short-term target for early December is about $58, just inside of the 52-week highs. I will alert you more when I enter this, if and when I enter the position. I'm looking at this and Ethereum. Probably don't do both because I don't need to be just that straight cracked out in terms of different, areas of that high vol assets. So in that way, anyways. So that is uranium. It's been getting clobbered down nearly 7% over the past 5 days. Today, reversing it though, up to 0.25%, like much of the globe. Let's see. The next thing I want to see it take though is right about that $51 mark, the 20-day moving average. I want to see it hold 51, and then I would say it's safe to get in the water, and then I would look at 51. 58 December call spreads, or just straight calls. It's uranium. The thing's going to likely fly. Writing about this, you can read it tomorrow on Ark, the second worst performing ETF. Sorry, Kathy. She's down 6% on this in the past 5 days, but a very nice day today, up 2.5%. Similar to what I just said on uranium. I want to see this. I'm looking closely at this as well. My spread I have for this is a December 85.92, but still playing with the strikes. Want to see where the stock is when I enter. But I am not a fool. I will get into Kathy Wood. Again, similar to what I just said about uranium, don't want to buy into weakness. I would rather see this curl above a 50 RSI, which it has not had for 7 days now. Very rare for Kathy. I think it bases this week kind of reminiscent of the overall macro market. It bases maybe another, I don't want to say flush, but maybe a tiny bit lower. To be frank, under $86, I think is a great level to enter this. And my target is, like I said, right around 93.5. Okay, is what I'm looking for, and that is a nice $10 gain. You could just also straight out, you could buy the 87 calls for December. Be careful, right size the position. And then lastly, the third loser of the week. So again, uranium winner, peaked in October. They're selling it, taking profits, not bubble bursting behavior. Ark, absolutely. You're looking at the chart. Winner, peaked last month. That is not bubble bursting behavior. They're taking profits. The next one, you see for yourself. I think Helen Keller could tell me what this one is. Taking profits behavior. Look at this. This EWI, we said this was going to decline something like 9%. Maybe a couple of you laughed. That's exactly what happened on November the 3rd. It went from 101 to November the 7th. It happened tighter than we expected. It happened in 4 days. It went from $101 to $90. So last I checked, that's $11, or about just a little bit more than 10%. So exactly what we had called for. This is your third biggest loser of the past 5 days. Today, up 4%. This is what makes me think that the market likely doesn't flush, because these things have gone with gusto very, very aggressively. It makes me think with the risk on nature, that hammer is like one of the hammers that we saw before, and exactly what you think. Why technicians call that. It's a hammer in the ground, and it lets you know what the next level is. This is not going to be touched again, essentially. The entry in terms of levels, though, however, I would much, an attractive level is 92 even. And you were there on Friday. Hell, you were at 90 on Friday. So if you get some kind of volatility, I would take it in South Korea. The option chains are super, thin. Be careful. This doesn't trade a ton. You might be better off buying the stock, or, in terms of just looking at like a chart like anything else, but you always have taken those criteria when you're trading options, like something like a 92 100 call spread. But if you get that decline at 92, if it doesn't happen and this thing's up 2% again tomorrow and you choose to chase it, then I would do something like a 95 100. But be careful with it. similar to what I said, it looks like the bulls are getting ready. Again, also, this one's been super strong. We're talking about calling out 44 RSIs. This thing's been above 52 RSI since Labor Day here, since this breakout above 75. I'm also writing about EWY tomorrow. Basically, a quarter of this is Samsung, so it's also a tech play, but you're getting exposure outside of the Mag 7. One of the reasons why folks are flocking into this one. And some national things that are doing on the ground there. Top 3 trades of the past 5 days. If you've been long gold miners, told you to. Short uranium, tactical trade. Short ARK, tactical trade. You're absolutely killing the stock market. Those are 3 best performing ETFs in all the world. We will be back on Wednesday with stock edition of Trading Trends. And yeah, read my stuff on Chart Advisor. Also Wednesday morning, I will see you on the morning show with JC Peretz and Steve Straza on Stock Market TV. Peace, y'all.